Hi, everyone, and welcome to the 149th episode of the Timing Research Show for August 14th, 2017. My name is David Kosmeter, and I'm the creator of Timing Research. Today, we will be discussing the 203rd weekly report, which you should be seeing on my screen now as I'm talking. But you can also go to TimingResearch.com and download the full PDF there. I have Matt Buckley back to host today, so I'm going to go ahead and turn it over to him.
Thank you, David. All right, folks, welcome aboard. You know, it seems like every time I host, it's almost tongue-in-cheek when I say we really don't have that much to talk about, right? I mean, God Almighty, we got Nazis and communists fighting in our own country, and we might have a nuclear war with another country. You just can't make this stuff up, folks. So incredible week last week, and we have a lot to talk about this week. David's done another great job this week of getting some 500-pound heads together. I think we got Lance here, Lance Ippolito of Alpha Shark, Barry Rosen of FortuCast, and Simon Klein of TradeSmartForex.com. So, gents, welcome aboard. Looking forward to working with you today and discussing everything that's going on in the markets and the weekly report number 203 there. Let's keep that same batting order as we go through our discussion throughout today, and then we can also jump in whenever we see something juicy or meaty out on the table there. So before we get into the report, Lance, then Barry, then Simon, why don't you guys give everybody that executive summary about your background and how you got to where you are at Alpha Shark. So Lance, why don't you kick us off?
All right, hello everyone. I'm Lance Ippolito. I guess I started in the business as a CTA. I feel like every time I say that, other people on the show always harp in and say they started off as a CTA too. But really over the past maybe 2 to 3 years, I kind of switched to equity options, more short-dated options, just because of the lack of volatility in the market. And really over this past year, switched to, I call myself a junk stock trader. So trading names that are not too familiar with. Most traders trade like the Momo names, the indexes. And I trade weird stocks like Chegg, First Solar, JD, Weight Watchers, Yandex, just odd names normal people don't look at, so to speak. So most of the highly shorted names, I'm looking for short squeezes via cheap out-of-the-money call options, or if I dare say, bearish activity, out-of-the-money puts. And so, like retail names, something I've been trading a lot recently. I am on AlphaShark.com. We have a live trading room I'm on for about 2 hours a day. Follow me, Lance Ippolito, on Twitter for some videos and other fun commentary on the market and comical action as well.
Awesome. Well, that's great. Welcome aboard. And yeah, you and I work together, so I'm looking forward to your take on what's going on in the market here. Barry, I think you and I have worked together before here as well. So Barry, welcome back, and give us your little executive summary there.
Okay. I'm with FortuCast. I've been here for about 30 years now. I can't believe we entered our 30 years. I don't know how I've made it through 30 years of crazy markets. So I've experienced all the bears and the bulls and all the craziness. I'm kind of a cycle person, and I was really fascinated about why things go up and down on an individual day. And I eventually became a CTA, and I kind of started combining my cycle work with Elliott Wave, and I use a lot of other traditional technicals also, but I'm really into patterns. Patterns usually keep me out of trouble, and if I even think if my emotions get involved, usually the patterns kind of save me. So I spend a lot of time with patterns. Our company we have an ETF timer for security people. We do 15 commodities and even S&P day trading outline also. So I've kind of covered the broad spectrum of everything, but most of our traders want to know about the S&P, and we've been within it.
Okay, great. And like I said, look forward to working with you again. And then, well, I'll do myself last here. Simon, why don't you give us your executive summary and a little bit about yourself, your background, and what you currently do for TradeSmartForex.com.
Okay, thanks, Matt. Great to be back again as well, David. Thank you for having me, and I hope everyone's going to enjoy this show. I'm sure you are. So I started in the financial industry when I graduated from University College London in 1996. I was working at Credit Suisse in both London and New York. So that was my first entry into the financial industry. I started trading professionally, I guess, in 2005. So it was about 12 years ago now. And I traded for a number of different companies. And then I decided to go alone a number of years ago. And people were approaching me and asking me to teach them how to trade. So that's how TradeSmartForex.com was born, so to say. And over the years, I've gained experience helping many people from all walks of life become successful traders. So what we do at TradeSmartForex.com is we'll take a trader, no matter where they are in the journey, and we'll take them through to the end of that journey so they can literally see the light at the end of the tunnel and actually, not just see it, to get there. And it's kind of exciting to take people that either from right at the beginning all the way through to a successful trader. And we do that by training them how to read the market, a framework in which to read the market, because it's not one size fits all. Everyone's got their own psychology and lifestyle, and you have to tailor make a trading strategy and plan to fit the person. So that's why if you have a framework in which you can read the market, from that you can derive a strategy that fits you, whether it's whatever time frame you're trading on, whether you're scalping or swing trading or long-term trading, how much time you've got to trade every day. Those things are very important. So that's the first step, teaching people how to read the market. And then the second step, which is lacking very much in the industry, is teaching people how to run a trading business step by step. What do? You don't just take random trades. You have a plan. You have to go through, you have to log your trades. You have to log yourself. And teaching people the process so that what you're doing now to become a successful trader is your focus is on the process, not the outcome of that process. Having a trading plan and focus on executing that trading plan and adjusting it so that it fits you. You can do it in real time. And
that's awesome, Simon. I think you're actually getting into our question number 4.
Yeah. But that's exactly what we do.
Perfect.
Anyway,
well, I think that's why David asked that question, is because a lot of people ask it. Let's save the rest of your answer for that, because you're giving away some good stuff. Real quick, folks, if you're not familiar with me, I know I have a lot of we usually do our weekly options live trade brief every Monday at 1 o'clock. But for my members who are here, we'll be doing a joint brief tomorrow morning at 10 a.m. So just a quick reminder. For those of you who don't know me, my name's Matthew Buckley. You guys can call me Whiz going forward. As far as I know, my parents did love me.
Hey, Matt, are you there? I think we...
Can you hear me there, David?
Yeah, you're back now.
Okay, good. Sorry about that. I probably sat on my mute button there, so to speak. So real quick, guys, flew for the Navy, did some missions over Iraq, all that stuff. What's that have to do with anything? Is the fact that alluding to what Simon was talking about, you have to be disciplined. And I applied everything I was doing. I was one of you listening to one of these webinars. I was a retail trader, but I applied everything I learned flying a fighter aircraft, having discipline, having a plan, a strategy, implementing tactics, contingency planning. We never took off of an aircraft carrier and said, everything's going to be flawless on the mission. We're incredible. That's how people get killed. We actually do the exact opposite, and I do the exact opposite as an options trader. Eventually, that allowed me to pop up on the radar for one of the largest volatility arbitrage firms in the country, actually in the world now, Peak 6 Investments, right there, headquartered in the Chicago Board of Trade. Helped build a retail brokerage called Options House, many of you have heard of. Helped build a hedge fund, and also while I was there, I felt a little bit like Valentine in Trading Places, going from little old retail trader to essentially help run a multi-billion-dollar options firm. And while I was there in my spare time, I was the founder and CEO of the Options News Network, ONN.TV, kind of the CNBC for options. And I had an absolute blast doing it. And as I always say, no offense to anybody from Chicago, the weather sucks. if Chicago was Miami, you'd have a much higher retention rate of people like me. But I hopped on an airplane and did the Beverly Hillbillies down here to South Florida, and started Top Gun Options about 7 years ago. So that's me, and we're gonna get to what's more important, which is the trading and what's going on in the markets this week. So let's stop wanking about us and talk Lance. I'm going to combine a bunch of the questions.
Hey, Matt, before we get started, I just wanted to add something here real fast.
You bet.
Yeah, so I set up the show a little differently today so that everyone watching live should be able to see the live chat window on YouTube. So if you could, just make sure I know that's working. If you could just type yes or something in there. And if you have any questions or comments along the way, you can also type those out. So I'm experimenting with adding a little more audience interaction to these shows. So
okay, great. Is that it does it over on the left there, David? It says Q&A.
Oh, that chat box is just for us. There's a separate chat box on the live YouTube page that people can type in and see.
Oh, okay. So are you gonna hit those over the fence to us, or can we see them?
Yeah. If anyone asks a question, I can read it out later in the show.
Okay. Yeah, because it doesn't look like as the presenters any of us can see those. So if you can hook us up when the folks have a question, that'd be great.
Yeah, definitely. Will do.
Okay. Awesome. All right, Lance.
I see it.
Oh, are you seeing the YouTube page?
Yeah, it's on my other machine right here. I have the chat and the YouTube page, so I see the whole YouTube live. I actually just joined YouTube live like last week, so it's pretty cool seeing that.
All right, well there you go. Well, I'm not multitasking, so if somebody's making fun of that shirt you're wearing, I definitely want to hear that comment. So let us know.
That's why I wore it, actually. I know, being in South Florida, I figured.
Exactly.
I didn't go in the office today. I said, what am I going to wear? Am I going to wear like a tank top or something? I'll put on.
Well, look at me. I just got back from running on the beach. So you and I, everybody who's not in Florida right now can be jealous. But all right, my friend, based on the open today, which was this rip your face off, we're not all going to die rally, to Friday's close, which way do you think we're gonna close relation to the open today on Friday?
I'm a permable on my Twitter. It says Lance Ippolito, world famous Weight Watchers trader, permable 2017. I don't think I've ever gone bearish on the show.
And you're gonna start now? Wow.
No, I'm gonna say higher at the end of the week. Earnings that will help the Dow. I'm gonna go higher. It's very iffy, especially because we're up today.
That doesn't sound like.
I'm gonna go higher.
What's your delta?
Confidence is about 52 to 48 for that way. So, and trust me, I never go bearish. It's just, I was looking at the advanced decline line, the NYSE ticks today. Everything technically supporting that we're going to go higher. I haven't seen negative 800, negative 1,000 ticks like last week. We're not slamming lower. Slightly down, gold slightly down, the yen down. It was 0.5% earlier. I don't think we're going to continue to rip like we are today, but I think we kind of just slowly grind, maybe in the SPX 5 to 7 points a day up until Friday, and then we'll see if the shorts have to cover by then or not.
Okay. So we got about a 50 delta if we average that, and you're going higher. So, and then we'll swing back around to give us a little bit more some of your tactical reasons. Okay, Barry, how about you, my friend? Higher or lower by Friday, and what's your delta there?
Well, I'm looking at, I'm going to say higher in the end. I'm thinking this is a very whippy week, and whippy means it's not trending. It means you're just going to almost have to get in and out every day. So I'm giving it like a 55% chance of higher because I'm just not really. Usually the cycles keep me out of trouble, and I've got I've got a cluster of a strong bullish cycle into next Monday, and then I have another bearish cycle into next Monday. When I get that kind of confluence, it usually means kind of whippy. And look a lot at Elliott Wave, and when you get these huge kind of run-ups, what happens is they kind of they get whippy. They congest a huge range. So you'll get a 78% retracement of the move down last week, and then it'll retrace 62% of that, and then you end up somewhere in the middle. So in terms of where it's going to close, in terms of this week's opening number and Friday's option expiration closing number is probably a little higher, but someplace kind of in between.
Oh, that's a good point. All the folks at TGO know that Fridays are regular options expiration, so that always throws a little bit more vol into the week. Okay, we'll swing back and get some more tactical answers from you, but let's hear from Simon. Simon, what do you think Friday's close is going to be from today's open, man? Higher, lower, and what's your delta?
I would say likely higher, even though it could go back down again for other reasons that we'll discuss later. Yeah. But a lot of the times when you have those big moves down with no follow through and they bounce back, they generally close higher at the end of the week. And, and I'll go into the reasons why I think higher when we discuss that later. But this was a move down to a demand area, support area, and there was no follow through on the downside. I mean, there's a reason it went down as well. Once we kind of spiked up above the base and went back in, and the odds were likely that we're going to break below that daily base. And we did do that on Friday, yeah. Friday?
Perfect.
Yeah.
So pretty high confidence that higher by Friday?
I would say like 50%. 50% because of what's happened in on Friday. It could turn around and actually continue down. Don't know yet. We're still, we'll go into that, but yeah. And it could go down from where we are now. That's so.
Well, we're one, North Korean private, falling asleep on an artillery switch and 10,000 pieces going off. So or one tweet away from a nuclear war. So yeah, you got to throw that stuff out there. But Lance, let's go top of the order. Give us a more tactical view of what you're looking at this week to support your thesis for your 48 to 52 higher.
If you look at the overall trend of the market, we're extremely bullish, and my whole thing was during this market sell-off, with the VIX spiking higher. Usually, every time the VIX gets to that 16.5 range, we tend to sell off on these quick, rapid actions. So we'll have a VIX, back to 16.5 or so, and then usually, 2 to 3 days later, here we are trading VIX, 12.5. I wouldn't be surprised to see the VIX 11 to 12 by Friday. I tend to, I know everyone gets all bearish, and I was reading Twitter over the weekend, and all the bears come out of the den and everything. What's driving the market? Are earnings good? Earnings have been very good. Is the trend still up in a lot of names? Yes. Are the market leaders, your Microsoft, your Facebook, your Apple, are they? No, not at all. All those names are a couple points or so off the highs. You look at, good earnings that have been sold off, like a NVIDIA starting to retrace higher. A lot of the China names, you're seeing your WB higher. So I think data is good. I can't believe I'm saying that. Transports are at support, and then Friday we saw institutional call buying. Today we're seeing repeat call buying in names like Kansas City Southern, UPS, or AAL. All these names are bouncing. The Russell's at support. The Russell had a nice bounce. So technically everything looks solid so far. Good earnings are still driving individual stocks higher. I'm not looking at it saying, hey, the meat and bones behind the market is bearish. If it's an airstrike, a North Korea, something like that, that's a single event. If there's no follow-up on it earlier in the year, then I don't think there's going to be any continuation downside. And that's how these events usually work. People just seem to forget they ever happened, and let's just pour money into the equity market.
Well, that's what we've talked before, Lance, about this. If you're new to, it seems like now even mom and pop retail traders, which they always should have, but now know what the VIX is almost a household name. You go to a cocktail party now, people are talking about the VIX. But if the VIX is a balloon here, you blow it up with the uncertainty. But as Lance alluded to, once the uncertainty goes, let go of the balloon, man. We did a live trade brief Thursday, Lance, where I put on a bearish double vertical on VXX. I'm like, God, just like the Brexit, just like the election. I'm like, once, and this is like a Yogi Berra-ism, but it's blindingly brilliant. You ready? Once something is known, it's known. Whether it's the Brexit vote or the result of the election or the fact that Rex Tillerson and a couple other people came out and said, all right, everybody go to your corners and let's shut up for a little bit. The uncertainties is going to, we call that volatility crush or that vol smash. So couldn't agree more, Lance. That should definitely be looked at by everybody who's listening. Okay, Barry, more tactically, what are you looking at this week to support your thesis?
Well, I spent a lot of time with pattern analysis, and in our monthly newsletter, which came out about 2 or 3 weeks ago, I was looking for a 60-point break in the S&P and then a move back up to 2520. Now, I thought the break would be done by the 21st, and it happened. It came in real quickly, and it happened, into Friday. We fell 59 points on the S&P. So, in Elliott wave terms, he only fell in 3 waves, and so. Until we fall in 5 waves to 2,400, I'm kind of still saying, okay, this is still a bull market. I've been looking for 2510 to 2520 to complete the pattern on the weekly chart, and that hasn't come in. And I'm usually, what I'm concerned about is the month of October, where obviously we've got the budget crisis, and then if we hit 2510 to 2520, then we're vulnerable to full 200 points. But I'm not seeing, a major top in this market. In terms of this week, though, like I said, it's kind of a whippy week. You kind of take one day at a time. In Elliott wave, usually when you get these, I call today kind of a sucker punch day. It's that everybody kind of goes into the weekend short, and they get everybody short, and then the news changes, and then it shoots to the moon. And I agree with what everybody else said, that usually these weeks end up kind of ending up recovering. And so even though the best part of the move may be done today, tomorrow, I'm looking at 24.75 to 24.78 is probably a place the market will probably have trouble getting through this week. Maybe that'll come in tomorrow. We're still kind of we're just going to end up kind of whippy and not being able to get a position trade on. Next week there's a kind of a total solar eclipse, and those are it's the first one in the United States that's crossing the whole United States since 1918. And everybody's been talking about the solar eclipse, but they do affect people's emotions in the markets, and I do think that that's usually they're kind of a big focal point and energy point for markets. I've done a lot of study on eclipses and markets, and you usually get these. The Gulf War in 1990, I was advising people back then. Happened on a solar eclipse, and what happened is the markets were down, fearing the worst were going to happen. They dropped the bombs, and then the market exploded back to the upside because the worst situation was over. So I'm hoping that nothing happens where the triggers get pulled. But even if it did, usually what happens, I'm thinking the market will come back.
Yeah, couldn't agree more, and you stole some of my thunder for later, which is great. A lot of people aren't looking out to October, which you're right. There's a potential debt ceiling fight. I mean, hell, the Republicans own the White House, the Senate, and the Congress. They can't even repeal Obamacare. They voted 70 times under Obama to repeal it, and 0 times under a Republican. So the clown car. I know Mitch McConnell's already said repeatedly, we will get a budget. We will raise the debt ceiling. Well, this is the same guy that said we will replace Obamacare. So it's a great point to point out October's potential. And October, historically, as you guys know, 11 out of 12 months out of the year, the 1 month, the most volatile month of the of the year is October. So great discussion of October. Okay, Simon, how about you, my friend? More tactically, what are you looking at for the week?
Okay, it's best to, can everyone see my screen?
Yeah.
You bet.
Yeah. Can you, okay, so why did I say, potentially higher here? Well, if we look at I'm going to go make this big. We're still in an uptrend on the monthly chart. This is the E-minis. So we're still in an uptrend. So again, the trend hasn't ended yet. And if we look on the weekly chart, which is very interesting, this was a move down we had last week, right into an area of where you should buy, which is why we're bouncing back up, because we're in an uptrend, and this is a demand area in an uptrend. This is where we made new highs from. So we came back hard into this area and bounced back, which is exactly what's happening over here. If we look on the daily chart, this move down was spiked off by a breakout that failed. It's a false breakout, failed, and we broke below this base. We've been basing for quite a while, yeah? We broke, and this move down went right into the weekly demand area and bounced back. So why might we still be bullish? Well, we're still in an uptrend on the monthly and on the weekly chart. Why might we end that uptrend? Well, if we fail to make new highs now, then we may end the uptrend. If we turn around here and go down again, a lot of the time these moves, as I said before, that come down, big strong moves, we've had a lot of those moves in the uptrend on this move, in the moves up, and they were all bought. So a lot of times strong moves down that look bearish are actually just opportunities to buy. But we were making all-time highs in the market. So the only way the market can actually turn around to the downside is if the trend ends on the bigger time frames, or if we obviously ended the trend on this time frame. But the weekly trend is still intact, the monthly trend is still intact. Once those end, or once we fail to make new highs, or we break the trend, then we can say maybe we've got a top. At the moment, we still can't say that. So therefore, in an uptrend, you want to buy pullbacks to demand zones, which is exactly what happened here. It's a great place. And even if this doesn't make new highs, if you bought down here, you can still make profit. Whatever wants to do with their trading.
Simon, I think you nailed it. It's and this is a kid-friendly show, so I'll keep the right F out of it. But all of these pullbacks, folks, have been what? A BTFD, by the frigging dip. As my TGO members know here, folks, let's take a look at the S&P 500 year to date. Every pullback, every one of these violent pullbacks has been what? Political. Here's this pop right here, that's the State of the Union. That was a short. Everybody knew the dude was only going to say what he'd been saying leading up to the State of the Union, but sound a little more presidential. So that was a sell. This right here, ladies and gentlemen, this rip your face implosion was what? Holy crap, Republicans can't even repeal Obamacare under a Republican. That was that pullback. This one right here, this violent pullback, this was 1 or 2 o'clock in the afternoon, the famous Jim Comey pullback. Boom, 320 points in the Dow gone in the blink of an eye. Holy crap, they're going to impeach him. Within 24 hours, it was, well, Jim Comey's either a felon or he's a felon. He either committed perjury by saying a month before nobody's pressured him under oath, or he committed a felony by leaking classified data to the New York Times. So the market goes, that's stupid, let's BTFD. This one over here is Donald Trump Jr. emails. I was in a live trade brief at about 10:32 on a Tuesday morning when Donald Trump released his own emails and the market did this to the 50-day. And now look at this. Last Thursday, I said, guys, we're either going to bounce off the 50-day or we're going to go through it and bounce, and we will. Every one of these pullbacks has been political, okay? It's like Lance said, well, earnings and trying to find something that's keeping this market down. We can all bigger about the jobs numbers. It's 220,000. Well, it was waiters and waitresses. Well, it was 220,000. The earnings that we just got out of were the Q1 earnings were the strongest in 5 or 6 years. Q2, just as good. So yeah, there's brown shoots every once in a while, guys, and we might be in a trade war with China now, and we're shooting trade bullets at Russia. But ladies and gentlemen, this is I call it the Fred Sanford. Everybody, I'm dating myself, but if you watch Fred, Sanford's son growing up, we ain't grabbing our chest and saying, this is the big one, Elizabeth, I'm coming. I mean, we're hedged in case of that. But last Thursday, this was not panic selling last week, guys. And here's what, and to all my buddies on the panel here, that they can give me a vertical headline and say, guys, we haven't seen panic selling in a while, which scares us. I told my members a month or two ago when I was in Chicago, talking to my old buddies at Peak 6, they're like, Whiz, we're terrified because we have people on the floor, 28, 29-year-old, I was going to say kids, but 28, 29-year-old traders who have never seen you call this a pullback? That ain't a pull. That, I can find that in my couch. So folks, you're going to know when it's the big one, and usually by then it's going to be too late unless you know what the hell you're doing. So I forgot to give my whole prediction. This thing's up by the end of the week, guys. I'm gonna, and for my weekly options members on here, I'm sitting on my hands to see if we kind of peak out a little bit here, or if it's going to do this Jim Comey, or this same thing here, because each one of these, I said, now it's going to, you can see it running out of airspeed a little bit, leveled off, and then rip. Look at this one. Rip your face off, leveled off for a little bit, another final pop before we move sideways. So I went last and I forgot. We're higher by the end of the week, and I'm going to go a 70, 80 delta on it. Now I'm going to go pure options trader, Whiz, consult my attorneys. That's if we don't get an idiot tweet, something goes bump in the night, a North Korean patrol boat does X, Y, and Z, all bets are off. I mean, but that's the 20, 25% that I'm leaving out there that you have got to be hedged against. So I'll leave it at that, guys. But I think you nailed it, or a bunch of you guys did. So let's go top of the order and clean some of that up, because we all heard each other's answers for the week. So let's go through this one more time and see if you guys have anything, let's, like they do in Washington, let's revise and extend our remarks. And then I want to hit, I think it's question number 4 there. So Lance, anything to say based on what everybody else just talked about?
One quick thing, and I made a video, it might be on my YouTube. For 2017, every monthly option expiration week, so the 3rd week of the month, I think for maybe 1 month out of the year has been bullish. I was making note of this Friday. We always seem to run up and smooth out for option expiration week. It could be the institutions don't want anything, volatility wise to mess up the premium sold, but it's just every 3rd week of the month is usually bullish. You could go back to the calendar and do a quick analysis. But it just seems like every option expiration week in the monthlies is usually up for the markets too.
That's a great point. I mean, the trend is always your friend, and that's one of the reasons every time we've either hit the 50-day year-to-date or we just kind of went subterranean under it, it was a buy signal. So remember, folks, until Skynet becomes self-aware and everything turns around and kills us, computers are still programmed by humans. So this 50-day moving average, when we hit it on Friday, there had to be a little bit of a human intervention going, is this the Fred Sanford or is this the BTFD? And let's get back in all the, the Facebook and Apples that got beaten down. So it's a great point there, Lance, that, hey man, until, like I said, until Skynet becomes self-aware, this thing's going higher. Okay, so anything else to clean up on that, Barry, before we move on?
No, I think it's just what the fund managers are doing now. I mean, they've got cheap money. They anytime they get a pullback, they're going to buy it because that's how they make money. So you've got to, you have to assume it's going to go up until you get something huge, and the market gets scared of these something huges. But you're right. Every couple days later, it goes away. And it gets talked away. And even if we get something huge next week, I suspect that the market will find a way to come back into September. And these patterns on Elliott Wave usually keep me out of trouble. I mean, I time Elliott Waves. That keeps me different from the from the Robert Prechters, because if the timing is good and the pattern is incomplete, I'm staying with it. NASDAQ's really kept me out of trouble too. And as long as NASDAQ is in the market. This morning, NASDAQ had a breakout signal before the S&P broke out above, and it was pretty clear that, you know, the S&P was going to follow. And so NASDAQ, this whole move up is getting out of trouble. And what's worried me is that NASDAQ is starting to has been failing. Obviously, they've been rotating into the Dow out of, you know, the Apples and the Facebooks. But now that we've had, you know, a huge pullback on NASDAQ, oh my God, let's buy the heck out of it. It's great. You know. NASDAQ had been predicting 6260 or something, and maybe that's going to be our September high. 6500 was even a higher prediction up there. So once 6000 comes out on NASDAQ, you know, it'll be crazy.
I like I like the fact you're still beating that. You know, September should be okay, but October. Jeffrey Gunlock, who runs Double Line Capital, went out last week, or God, it seems like it was a lifetime ago. Was it last week or the week before? He bought, you know, when the VIX broke, you know, 9, and he's like, this is stupid. He said October. I still got buddies up in that building that shall remain nameless that people wear uniforms in. Let's just say I believe the president has told China, you got after they did vote for the first time in like forever for sanctions. Usually they say no or abstain. He said, all right, appreciate it. You got 2 months. So October's it, guys. If I were a betting man and I love me pictures on the walls of flying hornets. The 2 times I've cruised past Korea on the way to Iraq, what do you think we do? We war gamed. So let's just say that October, there might be an October surprise. So Jeffrey Gunlock was quoted last week in an interview saying, if I don't make 400% on my puts, I'd be, what's his exact quote? If I don't make 400% on my puts, I will be extremely disappointed. So if that dude, and remember folks, that's not lost money. If he said he'd be disappointed. That's not lost money to him. Remember, you know, you never lose when you're buying for your buddies, and you never lose when you're hedging. If you're the type of person that goes out, if you're listening to us today saying, man, you know, maybe I should throw some insurance on. If you're the type of person that says every month when you're filling out your USAA check or, you know, Auto, Home, and Life going, God, I'm losing money. You shouldn't be trading, okay? Mine's on auto debit. I don't even remember I'm paying insurance until when. Somebody down here in God's waiting room in Boca Raton runs and you're like, thank God I got insurance. So very, very well put. Okay, Simon, how about you? So you heard from us three here. Anything to clean up for the week or anything else on your radar?
Not really. Summer doldrums, just bear that in mind.
Mm-hmm.
July, August are not the most eventful months of the year. A lot of traders take holidays, so you know, it's probably a better idea sometimes to trade less or wait for the very best setups to show, and don't try and push it too much in these months. Wait.
Well, it's a great
December.
It's a great way to put it, Sam. Is what was the one of my favorite 1980s movies was War Games. Remember? And one of the best lines from it was, sometimes the only winning move is not to play. Sometimes the best trade it's not to trade.
Yeah, exactly.
That's kind of why I'm sitting on my hands with weekly options right now, because this is a rip your face off rally. I showed you the S&P 500 year to date. After we've had these, I want to make sure this ain't the time when I step in and go, the hell, you know, here we go, it's going even higher. And Tuesday and Wednesday, it's a dead cat bounce. So sometimes, Simon, you nailed it, my friend. Sometimes the best move is to sit on your hands a little bit. It's just like card counting. You know, card counters don't, not that I know anything about it, but if I were to card count, you don't walk up to the table in Vegas, sit down and put 10 grand on a hand up, and then you're out 10 grand. You sit there, you count the deck, you get a feel for it. And then you take some educated bets there. But okay, let's move on to number 4. Question number 4, Lance, over to you. What do you think are the main reasons why most traders are not successful and consistent? And what do you think the average trader, not meaning average in a bad way, but just the average retail trader to improve their consistency that's listening to us?
I think the number one thing people try to do is outsmart the market. Keep it simple, stupid. What I do normally is, I follow mostly unusual option activity all day. Or, I have an option scanner. I stare at it all day to see what the big funds are doing. And, what I notice is, obviously I can't pinpoint what their stock position is compared to the option. You know, I tend to see people make the mistake of, let's say I buy an option for 50 cents and it goes to 60 cents, I sell it. And then if you zoom out because you're so in focus, the chart's still bullish, everything's still bullish, and let's say 3 days later the option now is at 90 cents where you missed out on all that gain. So I think a lot of people, when they get into a trade, they take profits too quick, and then on the other side is people don't know when to get out. If you're adding to a position or you're not following your rules, just basically having a game plan. I have a poster board to my left that has a trading game plan. Of what I follow every day. I admit it. Sometimes I break it. Sometimes I get out too early. Sometimes I don't put a stop position and let it ride. And I call that gambling. If I follow my trading plan to the T, consistently, I'll continue to make profits and winning trades. Really combining everything, having that mental mindset going in. What are your expectations of the market that day? If it's a day like today where we gapped up higher, I'm not trying to get cute. I'm not trying to outsmart the market. Thinking I'm better than the smart money, because I'm not. I piggyback on trades. That's what I do. I see something, I piggyback on it. When the fun gets out, I get out. And I played in the options market. So there's the, if you're stock trading, you see a big portion of stock being dumped, well, then get out. You're not going to win by holding on a majority of the time. So I would say that a combination of that is very important. I have one more thing I learned. I have it here. And then at the end of the week, I analyze. Usually every week, every Friday, markets have been slow in the afternoon. I write down. I say what went right this week. What trades went right? What did I do? What went wrong this week? What to improve on? And then number 3 is what to improve on. So let's say I thought it was a good trade, everything was going great, and then let's say there was bad news or the stock got a downgrade. Well, let's say I lost money on the trade, but could I have planned for that? No, then I don't consider that, hey, I did something wrong. You have to always know that in trading that, I could be long 10 stocks right now, and then the moon hits Earth and everything just shatters, and I lose $10,000. Well, at the end of the day, I can't assess that happening. So
yeah,
coming into the game knowing, hey, I'm going to take winners, I'm going to take losses, but at the end of the day, with the mindset of there's another day to trade.
Well, it's interesting. Lance is, you indirectly channeled like your inner Rumsfeld. He say what you will about the guy. He had that great quote when he said, at Top Gun, at Top Gun Options, I say trading is a form of combat because somebody's going to win and somebody ain't. And in combat, just like trading, Rumsfeld said there's known knowns. There's things we know. There's known unknowns. There's things we know that we don't know. And then the last one you hit pretty hard there was there's unknown unknowns. There's things we don't know that we don't know. Here's a perfect example. Last week, silently, or on page D12, the U.S. intelligence community comes out and says, yeah, remember when we said North Korea won't have an ICBM capable of hitting the U.S. for about 5 years? Yeah, we all remember that. Yeah, they have one now. Okay. And then all of a sudden, boom, market now Trump fire and fury like he's from Pulp Fiction and Guam's in danger. I mean, that's a Rumsfeld. So if I got blown out of a weekly, I had a nice iron condor on, and here comes cream of some young guy blowing out my iron condor. But if those, just like flying hornets, if you plan for just everything that is physically possible, and then all of a sudden you're over Syria, and here comes a missile that just, the satellites didn't see it, that, if nobody knew about that, hey man, that might be your day, and do your damn best. So you hit it great. And I think a lot of retail traders beat themselves up when they take a loss on a trade like that, when they got to go, if anything, I know it's hard to do. What was it? A year and a half, 2 years ago, I got blown out of a Google trade because after hours, breaking news, Google announces a name change to Alphabet, stocks up 5% after hours. I'm like, what are you all, stupid? And if like anybody's going to call it Alphabet for the, I'm going to call that. Yeah, I'm going to call it Alphabet until I or Google until I drop dead because I lost money on it. But great job hitting the kind of the unknowns. Barry, how about you with question 4? In your experience, I mean, 30. You're a young looking man there, but 30 years. What are some of your debriefs or some of your lessons learned you can pass on to people?
Well, you know, I agree with you too. Is, you know, trading is a warrior profession. You've got to be disciplined. You've got to, you know, look at your risk. And my colleague over at Forecast, Rick Neiman, is very fond of using the term blue collar trading. I mean, sometimes you just, you know, when it goes to these key numbers, everybody in the world is thinking it's you know, they're going to do something in it. So, you know, NASDAQ 6,100 we hit the other last week or so, and it was actually a couple of weeks ago. And obviously, there's an obvious place to kind of like, you know, that it's going to eventually have to come off. But sometimes you just have to kind of like, you know, keep it like Lance said, you just, you know, just keep it simple and stupid. It's just sometimes you have to kind of do that. You know, what I always want to share with people is that people also have to kind of have an investment horizon. I think people are so much into get rich quick, and that's where you get kind of too slap happy. I mean, my dad was a poor grocer who grew up in Chicago, and you know he was making nothing, and he would put money into the stock market, and you know, $300, you know, every couple of months or something like that. And you know, he's 95 now. He's still alive, God bless him. And you know, he's got a portfolio worth $3 million because he just kept buying and holding, and he was smart. And even when it fell 30% in 2008, and you know, he got decimated, he stuck in there. You know, and so I think you have to kind of you know, not get into the get-rich-quick scheme and just really remember that, well, you want to have a certain part of your portfolio and as a kind of a long-term investment, or, you know, in terms of a long-term investment horizon, because you've got to kind of, you know, and then if you're constantly making money because your portfolio is appreciating, you can play the swings with, you know, a smaller percentage. Mm-hmm. So you got to be patient too. You got to be really be patient. I often get trigger happy, you know, I got to get in now because you know, we just had this news, but then you know, inevitably it comes back to a double top, or you know, as soon as you chase it, you're in trouble. You know, so you've got to kind of like wait for your numbers. Half the time, you know, they will come in, and if you calculate them carefully.
It's a great point. Again, that. You know, Barry, it goes back to me sitting on my hands with my weekly options trades. I'm like, yeah, this is a rip your face off rally, but you know, let's see how when the guys get back from their tin sandwich lunches in Chicago and New York, if this, you know, around the 2 o'clock, 3 o'clock time frame, to see if this thing kind of comes in, or if we are going to pull back a little bit and then head higher for the week. So nothing like being a little patient. So great advice out of Barry there as well. Simon, how about in your experience? What's the biggest or some of the best nuggets you could pass on to some of our retail traders that are listening?
Okay, I think the number one thing that's very important for you to have is a trading plan. Okay, everyone talks about trading plans. If you don't have a trading plan, don't trade. Okay, that's as simple as that. You cannot have discipline. Everyone talks about, I've got discipline. You can't have discipline without having a trading plan, because discipline is defined as the ability to follow a set of rules, and that's in your trading plan. So you can't say I'm disciplined without a trading plan. And if you don't follow your trading plan, then you don't have a trading plan. So it all comes down to having a trading plan. That's the number one thing that you need to have in order to become a successful trader. You need to have a trading plan with a proven edge. And that means having at least one strategy in your trading plan that has a positive expectancy. That means that over a large enough number of trades, you will make money. So therefore, once you know that you will make money over a large enough number of trades, then you can take losing trades, because those losing trades are part of a winning system. And you won't be so attached to those losers, because once you know, say, for example, you have a strategy that is right 50% of the time, but when you're right, when it works, when this trade goes to the target, you make 2 to 1. So you know ahead of time that half of your trades are going to, running that strategy, are going to be losers. So how are you going to feel if you have a losing trade? If you know that that losing trade is part of a winning system, and each trade, once you have a positive expectancy, then every trade makes you money, even if it doesn't, because you look at the average, and that's what positive expectancy. The more trades you take, the more money you make, so long as you follow your rules.
Correct.
So what I would say, the most important thing to do for the average trader to improve consistency is to build a trading plan that they can trust, and that has a positive expectancy. And then what you need to do is be completely focused on the process and not the outcome of any individual trade.
Man, nailed it. Folks, I hope you listen to all three of these gents, because they've nailed it. Obviously, getting the back cleanup, I don't have to add anything on top of that, except they're all right. I obviously have a trade plan. I give it out. It's a 7-step trade plan that I give out to all my TGO members, starting with step 1. What is your strategic mindset? Because a lot of traders, the average retail trader listening to us, are very tactical. They, North Korea what? And the Dow's down, 500 points out of the blue. Very tactical. They don't know what they're doing for lunch, let alone out to January of 2019. So we have a 7-step trade plan. And Simon, you nailed it. How can you be disciplined if you don't have a plan to begin with? It's physically impossible for you to be disciplined. And a plan, guys, I'm not going to get into the details that all these three gents covered, but a plan gives you something to deviate from. I will tell you this, it's in the other room, but the front page of every Navy flight manual says this: nothing in this manual takes the place of good head work and judgment. Meaning, you can deviate from your trade plan, but you better have a damn good reason. If it works out for you, we'll give you a medal. If it doesn't, we're going to pull your wings and throw you in Fort Leavenworth jail. So there's a fine line between hero and zero, but know that if you at least have a plan, you have something to deviate from. So this was great advice and a very good question, because I get these all the time. I'm sure you guys do, about, how can I become better? Well, you start by being disciplined and sticking to that plan. I have in our trade plan at Top Gun Options, I have 2 levels in a trade. There's something called an adjust level, where if it's going against me, I kind of scratch my chin and go, okay, should I adjust it, or what's wrong with this thing? So it's a little bit of a, the hair on the back of the neck standing up, like, okay. And then I have a no kidding eject level. Like if I come back from, Lance, have a tiki party there, or I'm running on the beach, we come back and we sit down and look at, like, holy crap, the trade's at this. That's not when you scratch your chin. I have 2 engine fire lights on. There's smoke in the cockpit, and my wingman's yelling, "Whiz, you're on fire, eject." That's not the moment to sit there and go, I wonder if I should stay in this trade and try and save it. That's the lack of discipline that Simon was and all these guys were getting at. So awesome, guys. That was a great one. Very, very good question. I appreciate all the insight. All right, guys, let's go ahead and back clean up. You know what I'm always going to do? We've all talked and worked together before. I'm going to try and steal, not just for me, but for all the listeners. Give me a good trade. I don't care if it's short term for the next hour or out to January of 2019. What are you looking at? What's on your radar? What's good, Lance?
Oh, man, I got so much. There's so much going on. So I trade earnings, and usually I put about 0.5 to 0.8, always about no more than 1% of my portfolio on any earnings trade, because they're, at the end of the day, obviously I don't know the results of the earnings and stuff like that. So they're always a bit of a coin flip. I like to use technical analysis, institutional option activity, to try to play directional on some of these earnings events. Your Google, your Microsoft, your Facebook, no one's going to have really inside information on that. But there's a lot of retail earnings this week, which I tend to enjoy watching. A trade setup that I'm about to put on, actually probably in the next 30 minutes, is DKS, Dick's Sporting Goods. The stock's at $34.40 right now. It's implying about a $4 move for earnings. The stock is at a multi-year low. And if you look at about a 20-year chart, right around 30 bucks, there's some support there. So I'm going to trade DKS through the using options to trade it via buying a bear put debit spread. I'm looking at the 32.30 bear put spread for Dick's Sporting Goods. And usually with these earnings, let's say I'm buying the spread for 50 cents, a $2 wide spread. My max profit is $2, and then take minus the 50-cent debit. So I could risk about 1 to make 3. So these are trades that I tend to favor for earnings. If I'm doing, let's say, a binary bet on earnings, so that's 50-50. If I could get something like a 300% return, 250% return, or more on the trade, I take that as a trade setup that fits my trading plan. So I like DKS for the short side. TJ Maxx is another one I'm doing via bear put spreads. Maybe Coach is another one that I'll look at tonight for bear put spreads. I know Target reports this week, another bear put spread name. I've traded retail earnings usually to the short side, and really this quarter and the previous quarter, retail, the earnings have been pretty bad lately. So
yeah. What was last week? Macy's, or wasn't it brutal last week?
Macy's was just horrible number. JCPenney's horrible numbers. Department stores, horrible numbers. I tend to pick directional via bear put spreads. If you're more conservative of a trader and you like kind of that 50-50, there's no shame of selling or using selling a bear call spread to finance a bear put debit spread. So a lot of option strategies I use for earnings to limit risk, limit capital requirements, and if people want to kind of know more, sometimes I post them on my Twitter feed, about 30 to 40 minutes before the market closes to kind of look at what I'm looking at to try to make the best possible trade.
Awesome, sounds good. We'll take a look. Okay, Lance, Barry, how about you, my friend? What puts a smile on your face?
Okay, so seasonally, metals usually go up. If you go back over X number of years, metals usually go up between late August and early October, and metals broke out last week, and there's a lot of tension out there. Silver looks particularly good. It's looking like it's going to $18 at least, and gold to maybe retest last year's high at $13.75. So I'm for people in the ETF business, I like SGOL, which is a Swiss commodity that is a Swiss ETF because it's not tied to they actually buy real gold with the money that you put into it, unlike GLD. But SLV, I do trade that, and I do like SLV to the upside, and I think the risk is not so great to the downside at this point. So those are two of my I'm liking metals for the seasonal play and the world tension play. When the S&P it does get up to 2520, I'm looking for a 200-point pullback on the S&P at least, and so we get up towards 2500 to 2520, we'll be looking to get on SDS, which would be a 2x ETF time play on the short side.
Yeah, ProShares Ultra Short, great way to play that. Okay, Simon, how about you, man?
Okay, you can see my screen again.
You bet.
Okay, excellent. So we were in an interesting level on the dollar. This is dollar index, and we're down in demand levels here, even though I think eventually it's probably going to break, unfortunately. I've been calling short the dollar for the past 5 months since up here, yeah? And we're basically down at this level. Now, what's happening here on the daily chart, maybe at the end of the day, we may be getting a bounce or a move to the upside. So we may actually move up to this level over here on the weekly. Now, say we go up on the dollar. Now, let's have a quick look at the yen as well. This is a yen. The yen futures is in weekly supply, and we're coming down also from this level. So moving down. So we're good. If the dollar is potentially going to go up and the yen's going down, then a good bet for a short-term trade is to trade the dollar yen. And if we take a look at the dollar yen over here, we can see we're also in demand levels down here, and we're going to the upside today. So again, we turned around. This may be good as an intraday trade to watch over the next, this week. Basically, look for an entry on a smaller time frames to actually play this on the long side if the dollar continues going higher and the yen falls to the downside. So that's it.
Sounds good. I'm liking the fangs here, guys. This little North Korea implosion last week. Both looking at what do I have on? I have a 950 or lower than that. Or no, that's Facebook. Let me get that in a second. I'd look at the 950 945 bull put spread on Amazon out about 2 weeks. There's some really nice premium in that. Amazon, I mean, my God, man, here's the rip your face off. Jeff Bezos has gone from you know, a nerd selling books online to looking like he's part of Skynet, bald head, and you know, looks like he ate a jar of testosterone. I'm not kidding you. Somebody posted, what was that, on my Twitter or something? There, look at those two pictures side by side, like Jeff Bezos launched Amazon, and today I think he is going to fly in outer space. But this is some serious profit taking here. I don't think this is a dead cat bounce. I think this is a backup here. But let's take a look at Facebook. Same thing, out a couple, maybe 2 weeks. It's doing a nice job holding this 165. So there's a rally, there's a ledge. Hey, earnings, and then Facebook. All these fangs tend to channel until something happens, and then you get this rip your face off rally. Channel and then rip your face off rally. Again, putting my attorney hat on. Something goes bump in the night. We get a, you know, Korea, something, a more significant trade war. I know the liberals were frothing at the mouth, and you know, we're focused more on the president again saying white supremacists suck. I mean, as if doesn't everybody know that Nazis, white supremacists, they all suck. All racism sucks, people. But he had to say it like 90 times. But I cared. Obviously, Christ Almighty, what happened in Virginia is it's awful. But after all of that, I wanted to hear what he was going to say about China and the potential him firing some shots, folks. So keep an eye on, and I do this with my members. We're keeping an eye on the FXI, if you're not familiar. It's the large cap China ETF. So I told my members to get out of our FXI right around here. And of course, it kept going up because I'm like, guys, something before we fire a real shot at China, he's going to start firing trade shots at, remember during the campaign, he campaigned saying, I'm going to label them a currency manipulator, day one. And day one came and went, and he didn't do that. So finally, we got the FXI pullback I had predicting all the way back here. But I do think this is a dead cat bounce. Like Barry was talking about, you know, the October kind of the debt ceiling and some other volatility. I'd be bearish on FXI, man. I told some of my members, if anything, I am very, very rarely just go out and buy puts guy. I just think it's awful because you can spread and defer there's a couple of these where I've changed my it's awful to, you know what? I might go out and buy some FXI puts out to October. If and God forbid, man, if you've ever seen combat or flown the people who've seen that stuff want it the least. So I don't want any of this, and I really wouldn't, like Jeffrey Gunlock, be disappointed if I didn't make money on those puts. That means nobody died and things got good. And with that, all my longs got greener. So obviously we don't want any of that stuff to happen, folks. But if it does, please, please, please make sure you're hedged. Okay. All right, guys. Hey, great show. Let's go top to bottom real quick. Lance, let us know how we can get a hold of you and what you do, and take a look at some of those magical tweets and stuff like that. So give us a little bit of love there.
Oh, I actually just posted in the chat, and let me do it right now. So you can find me on Twitter. Just search Lance Ippolito. You can email me, lance@alphashark.com. We have a live trading over there. Usually if people email me, I could give them a discount trial and stuff like that. Really, just feel free to email me anytime, ask any questions. You can private message me on Twitter. Yeah, I mean, you know, I'm always on Google Hangouts, Google Chats, always open to talk about the market. You know, I'm here all day watching screens, so.
There you go. And having drinks with umbrellas in it with that shirt on, right?
Yeah, you know, my Bahama Mamas and stuff like that.
Exactly. All right, Barry.
It's gonna be on the show. I'm talking to you.
Yeah, there you go.
We have two websites, fortucast.com, fortucast.com, and commoditytimers.com, and etftimertoday.com. But very easy to get us. On Facebook, we're at Fortucast Market Timing. We're on the website under Barry Rosen, Fortucast Market Timing. So very easy to get us. Support at fortucast.com if you want to email us.
Awesome.
Good to be here.
Yeah, thanks, Barry. Appreciate it. Good knowledge, folks. Obviously, very experienced gentleman there. Hopefully, you guys watch the replay if you came in late or miss any what Barry and Lance had to say. Simon, and how about you, my friend? How do we get a hold of you and check out what you do?
Hey, thanks, Matt. Great to be here again. You can go to my website. You can see on the screen at the moment, tradesmartforex.com. That's number 4 and then an x.com. And if you go there, you can find everything you need on the front page. There's a YouTube channel, Facebook page. You can go and watch the blog. I put out a video, Where's the Dollar Going Next, every week on Sunday. So you can see what the probabilities are of where the dollar's likely to go next every week. And it's pretty spot on every week. You can join the live trading room if you want. If you want to learn how to build a profitable trading strategy step by step, put your details in here and you can go and watch that video. It's about 20 minutes long, and it will give you the main things that you need to take into account to actually build your own profitable trading strategy. So it'll give you all the steps that you need to go through. That's it. So if you want to come and join us, then feel free. Take a look around the website, get an impression of what we do, and everyone's welcome.
Awesome, Simon. Yeah, you bet. Thanks for coming, folks. It's easy to get a hold of me or what we do here. Just head to topgunoptions.com. Obviously, when I started it 7 years ago, it didn't have a big marketing department. It was me. So it's topgunoptions.com. And if you're familiar with skiing, you can just scroll down and you have beginner, intermediate, advanced 2-week test flights. Beginner is kind of our accelerated retirement program. Intermediate is where we trade the front months and hedge, but also the back months out to Jan 19. And then finally, the advanced, it's not like it's rocket surgery. You just call it advanced because that's our weekly option service. A little bit more tactical, as we talked about today. I mean, hell, weekly options trades can be looking great Monday through Thursday and then suck on a Friday, or we can close them out like we have for the past couple of weeks, except last week. Past couple of weeks, we had one-day trades, put them on Monday, close them Tuesday. For the 2 weeks in a row, we had 65% gains in a day. But for each one of those weeks, you get one of those Thursday, North Korea, we're going to war, and you can get kicked in the gut. And finally, if you like all these guys, good content they put out, if you want to see my daily video, just head to go.topgunoptions.com/SITREP. Obviously, military guy, use a lot of military terms there. It's just the market situation report. So go.topgunoptions.com/SITREP, and it's a free daily 10 to 15 minute rant from Whiz. So David, appreciate it, man. Thanks for having me back as the host. I'll throw it back to you, my friend. And thanks to all the hosts. I actually got a lot out of today as well. And I had nearly 3,000 hours in the F-18. And I didn't land after one of those flights and say I didn't learn anything from it. So I actually learned something from my cohorts today. So I appreciate it, David, and thanks for having me.
Yeah. Thanks, guys. Great show. Just want to remind everyone watching, be sure to join us next week. That'll be on August 21st. Also, be sure to hit the YouTube subscribe button so you can get updates on future shows. And just want to thank my guests again for this week. Lance Ippolito of alphashark.com, Barry Rosen of fortucast.com, Simon Klein of tradesmartforex.com, and Matt Buckley of topgunoptions.com. Thanks, everyone.
We'll see you guys. Thanks.